From Bloomberg World Headquarters in New York to our TV and radio audiences worldwide, I'm David Weston. Welcome now to Balance of Power, where the world of politics meets the world of business. On the brief today, Kevin Cirilli from the White House on the House moving forward to impeach the president. Brooke Sutherland on FedEx and how low it can go. And from London, Anuja Devnath on the pound's reaction to news on Brexit, and also the Bank of England, which is going to decide something tomorrow. So let's start out with Kevin Cirilli. It's a big day on Capitol Hill. Where are we at this point, Kevin?
Right now, the House is going through the conversation that they're having on the floor of the House of Representatives ahead of the historic third impeachment vote, where President Trump likely going to be impeached. A handful of Democrats expected to actually break from the party and vote with Republicans against impeachment. From there, a quick trial in the Senate. Leader McConnell, the Republican in the Senate, saying that he is anticipating a quick trial. But here at the White House, it's really business as usual. We're anticipating that vote, David, to happen anytime between 5 p.m. New York time and 8 p.m. New York time. President Trump, for his part, is headed to Battle Creek, Michigan later this evening, where he will host a campaign rally. An opportunity for the president to give his critique and his assessment of that impeachment vote.
Yeah, he already gave a critique yesterday in a letter to Nancy Pelosi, the Speaker of the House. What's the reaction about Capitol Hill to the President of the United States really going after the Speaker pretty strongly?
You know, to be candid with you, it's business as usual. I was up on Capitol Hill all morning talking with sources and aides and members of both parties, and really both camps are dug in. I had one senior aide to a prominent Republican senator put it this way: we started this process with the expectation that Speaker Pelosi would impeach the president by the end of the year and that he would be acquitted in the Senate. And so far, that's still where we are, David.
Okay, thanks so much to Kevin Cirilli reporting from the White House today. And now we're going to turn to Brooke Sutherland. She's here to talk about FedEx. So last June, I think you said they fell out of a basement window. They've got even worse now.
It has not gotten any better from here. It's just been a string of disappointments for FedEx for really almost 2 years at this point, and it's the same old story. And I think what's head-scratching for investors is how have they not figured it out at this point? So they're still grappling with rising costs as they, continue to deal with this deluge of e-commerce shipments. You have had the trade war weighing on the industrial economy and some of their more business-to-business shipments, which tend to be more profitable. But then it's also just execution. FedEx should have had a better handle on some of these issues, and they just did not.
Well, that's one of my questions is how much of it is execution, how much of it is ability to forecast? Are they just not getting the numbers right, or do they really have execution problems? Because I think UPS is actually up on the year, and the S&P certainly is up on the year.
UPS has been doing a lot better, and so both companies have spent billions of dollars trying to renovate their networks and get them to the point where they can profitably handle these e-commerce shipments. Now, UPS is starting to see a return from that in the form of rising margins, and FedEx is just not. A huge margin miss this quarter in its ground division specifically, and it blamed that on the timing element, the fact that there's a shorter distance between Christmas and Thanksgiving this year. But again, to your point, they knew that. The calendar has not moved since they gave their last forecast, and to miss so significantly, I think does raise questions about their ability to get a handle on what's happening with
And then
business.
Amazon sort of gave them a little kick on the way. I don't know how material it was, but they have some new management in, right? They've had some senior ranks. Is there a new plan about what they're going to do at FedEx?
So it's been really interesting because UPS has hired a lot of new management, and they have gone outside of the company. They brought in executives from Walmart, from PepsiCo, from a lot of different places. FedEx has always promoted internally, and it continues to do that. And so you see the company being run by longtime veterans. And I do think it's worth asking if maybe some fresh eyes might help the company, bringing somebody in from the outside and asking some different questions.
That's a fascinating story of a real legendary company for the United States. Okay, thanks so much to Brooke Sutherland reporting on FedEx. And now we're going over to London and Anuja Devnath and talk about the pound and what the pound's done. It was really doing terribly well when Boris Johnson got elected, and then we got news of this hard Brexit, not doing so well now.
Yeah, exactly, David. I mean, we did have the pound, on the day of the elections with Boris Johnson's, majority. It got to one of its highest levels since early 2018, and then since then it's just been quite a move. It's fallen 3% since then. Right now, it probably saw the biggest sell-off in over a year this week. And it mainly, again, boils down to this. Yes, he's got the majority, but what is he going to do with it? Is he actually going to extend the transition deal now that he said he probably won't? It again brings back the risk of a hard Brexit by the end of 2020. So, yeah, the pound's having a bit of a wobble.
And what are we expecting out of the Bank of England? I mean, it's a little hard for Mark Carney. He really is a lame duck at this point. They're talking about possible replacements. How does the Bank of England respond to all of this?
Exactly. I mean, just like the pound, gilts as well on the day of the election and the results. the kind of setback that gilts faced, that's completely wiped out as well. And even on the day of the election, traders actually were paring back on calls for a rate cut by the Bank of England. It was a 30% chance for a 25 basis point rate cut in 2020. Now that's gone up to about 76% to 80%, and that's quite a flip in a matter of 3 days. So again, it's not just about economic fundamentals, which aren't particularly really great in the UK. It's mainly about Brexit and what that means. We have had data out of the UK. Inflation's near a 3-year low. Manufacturing PMIs, I think it was one of the worst numbers in 7 years. So altogether, it isn't looking really easy for the Bank of England to, consider just staying on hold. So we did have Deutsche Bank come out today saying that they could cut as early as January.
Okay, Anuja, thank you so much for joining us today from London. That's Anuja Devnath.
Thank you.
Now, let's get a check on what's going on in the markets and how they may be reacting to some of the events of today. So as we look at this Kaylee Lyons, it looks like it doesn't do anything dramatic, but it keeps moving up.
We are still riding, I think, that momentum because of the fact that a lot of risks have been removed from the market. That said, there's not a lot of overly good news, but the trend is higher. The moves we're seeing today are pretty marginal. You have the S&P 500 higher by less than 0.1%. And when you consider yesterday's trade, that was the tightest range we've seen since December of 2017, only about 7.2 points on the index. And we're looking at even in a tighter range today. So there's not a lot of action going on. Volatility is relatively subdued. But when you look at the action in other asset classes that aren't equities, which have run so far, look at bonds. The 10-year yield is now crossed 190 again. You're seeing oil, although it's flat on the day, was higher for the past 4 days. Of course, that a riskier asset. So it is still a risk on trend. We may just be slowing down as we head into year-end.
The one thing that seems absolutely clear, I think, is they don't care about impeachment. Whether they vote on impeachment or not, it's just that the markets don't seem to react at all.
Yeah, not really seeming to react. I think the market pretty much knows what they should have priced in at this point, and unless there's a huge surprise in the Senate, for example, there's really not a lot of risk to this risk-on rally we're seeing. They cared much more about geopolitical risks such as trade or even Brexit, which at this point seem to have calmed down. So while I'm sure people have their eyes on impeachment today, it's not going to move the market in any particular direction.
But what a difference a year makes. Remember last December what was going on in the markets? It was not very pretty. Yeah, not very pleasant. This is much better. Okay, many thanks to Kaylee Lyons for that report on the markets. We turn now to Mark Crumpton. He's here with Bloomberg First Word News.
David, thank you. As we've been reporting, an historic day on Capitol Hill. After hours of debate, the Democratic-controlled chamber is expected to make Donald Trump only the third U.S. president to be impeached. The president is accused of abuse of power and obstruction of Congress. Impeachment would set the stage for a trial in the Senate next month. The Republicans who control that chamber have made it clear they will acquit the president. Timid isn't how most people would describe Stanley Druckenmiller, the investor renowned for making huge, aggressive bets, including one that infamously broke the Bank of England. Yet that's how he describes himself today. It's not that the billionaire investor has sworn off taking risk, but he tells our Eric Schatzker in an exclusive interview the current state of politics in our country has him unsure about what investments are safe.
This administration, with wondering about where the hell the next bomb is coming from, just doesn't allow me to take some of the positions I've taken historically where I just thought it was a one-way bet. To me, this was always binary and a two-way bet.
And Mr. Druckenmiller is not a fan of President Trump, yet the possibility that a left-wing Democrat will be elected president is one of the three events he believes would end the decade-long bull market. The others are a major sell-off in credit markets and a sudden acceleration in inflation that prompts the Fed to jack up interest rates. Forecasters now say at least 24 tornadoes hit the southeast this week. Survey teams from the National Weather Service found evidence that twisters struck from western Louisiana to southern Georgia on Monday and Tuesday, with 10 tornadoes in Mississippi alone. The most powerful storm was a Category 3 tornado, packing winds of as much as 160 miles per hour. The severe weather killed at least 4 people. Hong Kong has canceled its traditional New Year's Eve fireworks show. The reason? Concerns over security following 6 months of pro-democracy protests. It's the latest popular event to be canceled in Hong Kong. Parades, conventions, and sports events have also been scrubbed. Global news 24 hours a day, on air and on Quick Take by Bloomberg, powered by more than 2,700 journalists and analysts in over 120 countries. I'm Mark Crumpton. This is Bloomberg. David?
Thanks so much to Mark. We've been talking about it. Mark just mentioned it's a big day in the House of Representatives as the House now takes up the question of impeachment. Nancy Pelosi is speaking right now in the House of Representatives. They're going to have about 6 hours, I think, of debate, and then they're going to vote on it sometime later this evening. You can watch it all on the Bloomberg function by going into Live Go. This is Balance of Power on Bloomberg Television and on Bloomberg Radio.
Politics comes to Congress to impeach a president, but every one of us, as our first act as a member of Congress, stood on this historic House floor before.
As we come back in right now, the House of Representatives is taking up those 2 articles of impeachment. We have the Speaker of the House, Nancy Pelosi, speaking even as we are now talking to the complete House. They're going to have several hours of debate, followed by a vote in which it's expected that the House of Representatives will impeach the President of the United States. It will be only the 3rd time in history that's been done. It should happen sometime later on this evening. Today's historic impeachment vote is not just hitting the president, though. It's weighing on his agenda as well. The White House has been pushing for the USMCA to be passed this year, but Senate Leader Mitch McConnell has been clear that that ratification must come after an impeachment trial. I asked Ohio Senator Rob Portman about this timetable this morning when I spoke with him.
Although this agreement is very popular, and the reason is it's a replacement for NAFTA, which is the existing agreement between Canada and Mexico that's 25 years old and outdated. And so it improves it in a number of ways. And some people have expressed concerns about USMCA from the right and the left, but I think very few of them would say that it's a worse agreement than the status quo, which is what you have if you vote against it. And the reason it's a better agreement is it opens up more markets. I mentioned the ag community earlier. They're very excited about this because it increases access for dairy products, for individual commodities, for wheat, as an example, into Canada. So there's some very positive things for the ag community. It also helps in terms of intellectual property protection, which is important to us. A big thing in here is that it has new digital protection. So the digital economy wasn't around 25 years ago, and so there's no provisions in the current NAFTA accord. And for my home state of Ohio, we do a lot of trade with Canada and Mexico. Canada, by far, #1 trading partner. A lot of it's digital. A lot of it is people selling things online, and right now they're not protected. The tariffs can be assessed to this as compared to the USMCA, which doesn't allow tariffs to be put on digital economy, and it increases the threshold for customs duties to be applied, so it reduces the burdens, reduces the costs, and basically just provides protections that aren't there now.
So, Senator,
also, it has labor and environmental protections that are enforceable. So it's a better agreement than the status quo.
That was part of my interview with Senator Rob Portman earlier today. He's a Republican, of course, senator from Ohio. To talk about what the USMCA could mean specifically for manufacturers, we welcome now Jay Timmins. He's president of the National Association of Manufacturers, coming to us today from Washington. So, Mr. Timmins, thank you so much for joining us. Why don't you answer that question I just posed? What does the USMCA mean specifically for manufacturers?
Well, good afternoon, David. I actually have a couple of numbers for you. The first one for you specifically is 29. And you might not remember that number, but that's actually the point spread from the game where my Buckeyes beat your Wolverines.
Yeah, thank you very much. I appreciate it. Let's move on from that, Jay, if you don't mind. Okay, yeah, exactly. Thanks a lot, buddy.
Yeah, no worries. But the real number that we ought to be talking about today is the 2 million jobs that the North American trade relationship here in North America means for manufacturers in the United States. 2 million American manufacturing jobs. So we're very, very excited about getting USMCA across the line. We're very pleased that the Trump administration and specifically Ambassador Lighthizer has finalized these negotiations and moved this forward.
So where will it take us, Jay? And I ask it for this reason. The president came in really focused on creating jobs, and specifically in the manufacturing sector. And for the first couple of years of the administration, that happened, and then they came back off. They aren't quite back down to where they were, but it's pretty darn close. So overall, I think trade has taken back to some extent what he created with some of the stimulus. Do you anticipate this will take it back up again?
Yeah, I think manufacturers are very optimistic about the passage of this agreement and also the gains that we've made with the Phase 1 agreement with China. Trade has been, you've made the point, it's been pretty vexing for manufacturers after a great year of gains from tax reform and regulatory certainty. So we're very pleased that we've kind of broken down this barrier, and we're getting ready to move forward. It looks like we're going to have a very positive vote in the House tomorrow for USMCA.
And let's talk about the changes that the Democrats worked. Nancy Pelosi, the Speaker of the House, talked about how much they transformed it. How are manufacturers with that? On the one hand, we have some of the labor changes, the arbitration panels to really enforce the labor provisions. On the other hand, we didn't make the progress that some of the United States wanted to make on the biologics.
Yeah, thanks for bringing that up, because those are some concerns that manufacturers have. There's no doubt that we would have preferred to see some other provisions in there, like intellectual property protection for biologics. Senator Portman mentioned that the digital economy didn't exist 25 years ago. He's exactly right about that. On the other hand, the advent of biologics wasn't around 25 years ago. We'd have been very happy to see some progress there. We hope that future agreements, especially with China, are protecting the intellectual property of our pharmaceutical products as well.
We're talking with Jay Timmins. He's president and CEO of the National Association of Manufacturers. So James, give us a sense, if you can, of the geography of the manufacturing uptake in jobs. Because as we know, there were certain key states, such as Wisconsin, my home state of Michigan, where, yes, we did lose to your Buckeyes, but Michigan and Pennsylvania, those will be key states going forward. Are the manufacturing jobs that you're looking toward creating evenly distributed? Will they show up in states like that?
So they are. We're seeing a revival, a strengthening, if you will, of manufacturing all across the country in all sectors. But as we just discussed, there was a bit of a pause as manufacturing optimism took a fairly significant hit over the last 3 months. We went from the upper 80s and low 90s down to the 60s in terms of optimistic outlook for the economy. That number has actually stabilized in our most recent quarterly survey, and I think that's a reflection of manufacturers' belief that we're finally making some progress on the trade front. And our survey was actually taken before the announcement of USMCA. So we feel very good that manufacturing confidence is going to continue to increase. And what that means is it means more investment, more job creation, higher wages and benefits as we move forward. So I think you're going to see that geographically all across the country, and I think you'll see it in every sector, too.
Jay, just one last thought on China, because we haven't talked about that. We're talking about USMCA. Yeah. If we do have this phase one deal, will that affect manufacturers? We hear more about farmers.
It's definitely going to impact manufacturers. We were frankly thrilled and surprised that so much was achieved, at least in the announcement of what was agreed to with China. Intellectual property protections, very hard intellectual property protections that are verifiable and enforceable, seem to be part of that phase one deal. It's very, very exciting for us that we've made that progress, because that is something that presidents of both parties, trade ambassadors of both parties have been stymied over for decades with China. So this is a major, major victory, I believe, for the Trump administration, for Ambassador Lighthizer, and certainly for manufacturers in America.
Okay, thank you so much, Jay. Really good to have you there, despite your allegiance to the Ohio State Buckeyes. It's Jay Timmins. He's president and CEO of the National Association of Manufacturers. And a reminder that you can watch and listen to the impeachment debate as it's happening right now on the floor of the House. That's Doug Collins, congressman from Georgia. You can go to the Bloomberg and use the function Live Go. This is Balance of Power on Bloomberg Television and Radio.
And said it would be dangerous.
This is Balance of Power on Bloomberg Television and Radio. I'm David Weston. We have a bit of breaking news right now. Shares of SNC-Lavalin are soaring as trading resumes in the Canadian contractor. As a unit of the company just settled Canadian fraud charges. You remember, this is the company that had gotten into trouble and got actually Premier Justin Trudeau in a lot of problems up there because he tried to settle this deal. Well, now the company has agreed to pay $213 million over 5 years to settle the charge. Canada's ethics commissioner ruled in August that Prime Minister Justin Trudeau inappropriately interfered in SNC's behalf to ease the legal problem. So that's developing right now with SNC-Lavalin. In the meantime, let's talk about the stock of the hour. The stock of the hour is Dish. Dish Network is one of the best performers in the S&P 500 today, surging the most since August after the company's chairman signaled billions in financing for a new wireless network. Kaylee Lyons is here with more. This is an exciting story. We're going to have a whole new way of getting our cell phone service.
Well,
right?
Potentially. Ask Charlie Ergen. But he was testifying in the antitrust hearing for T-Mobile and Sprint. Of course, state attorneys general against that $26.5 billion merger, saying that it's going to limit competition, as a result raise prices for consumers. And Dish is a central part of their argument that it won't, because Dish is creating its own network, in part used from assets that Sprint is going to sell them. Sprint offloading its prepaid Boost Mobile to Dish as part of this deal reached with regulators. And Ergen also said in his testimony that T-Mobile is going to allow the use of its network as it builds out its own. Now, where the optimism for Dish is coming in today is Ergen says he's going to have the financing to do this. He says banks have pledged him about $10 billion, and he says they're going to be able to compete from day one.
So he's got $10 billion, he says, at least commitment from the banks and loans. He's also got the business, the brand that he's inheriting, which is this prepaid service. He says he can start on day one. But why was Sprint so willing to give up this prepaid service? It's not necessarily the most attractive part of the business.
No, it's not. I mean, you have to consider Boost Mobile lost over 200,000 subscribers last year. It's far less in terms of revenue postpaid service. It makes about 20% less than prepaid. And then when you just look at Dish as a whole, it's going to start with about 9 million subscribers to Sprint's 50 million. So that's the argument of the state attorneys general here, is that there's really no way that Dish is going to be able to replace Sprint in terms of competition. Now, Dish says that it's going to start as prepaid, but eventually it is going to build out a postpaid service, which would allow it to compete with the likes of AT&T and Verizon and get those more lucrative customers. The question really is just how fast is Dish realistically going to be able to do that?
Exactly. And in order to go fast, how much they have to compete on price, which means the margins go down, not just for Dish, but also for the other players in the market like Verizon and AT&T.
Right. Well, and that's the argument of T-Mobile and Sprint in the merger. They're saying it's not actually going to lead to higher costs for consumers because the two of them together can cut costs, which means they can lower prices. But again, all of this, the question at the trial.
Very exciting. Okay, thank you so much to Kaylee Lice for that report on Dish. Up next, 2019 has been a big year for antitrust enforcement. We look forward to what we can expect in 2020 in today's edition of Antitrust Angst. That's coming up next on Balance of Power on Bloomberg Television and on Bloomberg Radio. From New York, this is Balance of Power on Bloomberg Television and Radio. I'm David Weston. For Bloomberg First Word News, we're going to go now to Mark Crumpton.
David, the House is pressing toward its historic votes to impeach President Trump, arguing over the charges he faces and the legitimacy of the probe. Speaker Nancy Pelosi, who arrived at the back of the chamber as the day-long session was underway, has the Democratic votes needed to make Mr. Trump just the third U.S. president to be impeached, exercising what she called one of the most solemn powers granted to us by the Constitution. The Trump administration wants Americans to pay less for prescription medications. The government unveiled a plan today to loosen restrictions on importing foreign drugs and get more inventory from Canada. That incited backlash in Canada, where some said it could lead to shortages of critical medicines. Timid isn't how most people would describe Stanley Druckenmiller, the investor renowned for making huge aggressive bets, including one that infamously broke the Bank of England. Yet that's how he describes himself today. It's not that the billionaire investor has sworn off taking risk, but he tells our Eric Schatzker in an exclusive interview the current state of politics in our country has him unsure about which investments are safe.
This administration, with wondering about where the hell the next bomb is coming from, just doesn't allow me to take some of the positions I've taken historically where I just thought it was a one-way bet. To me, this was always binary and a two-way bet.
Mr. Druckenmiller is not a fan of President Trump, yet the possibility that a left-wing Democrat will be elected president is one of the three events he believes would end the decade-long bull market. The others are a major sell-off in credit markets and a sudden acceleration in inflation that prompts the Federal Reserve to jack up interest rates. Australia recorded its hottest day on record Tuesday, with the average maximum temperature across the country topping 105 degrees. The oppressive heat is being made worse by devastating brush fires. Officials warn the demand for air conditioning is putting pressure on the nation's vulnerable power grid. Global news 24 hours a day, on air and on Quick Take by Bloomberg, powered by more than 2,700 journalists and analysts in over 120 countries. I'm Mark Crumpton. This is Bloomberg. David?
Thanks so much, Mark. 2019 was an eventful year in antitrust law, with the Justice Department overruled on the AT&T Time Warner merger, its approval of the T-Mobile Sprint merger challenged by the states, and an open fight breaking out between the FTC and the DOJ over patent licensing by Qualcomm. It's the source of today's antitrust angst, and we're pleased to welcome now Jennifer Rhee. She's senior antitrust litigation analyst for Bloomberg Intelligence, and Bill Baer of Arnold & Porter. Mr. Baer earlier served as the Assistant Attorney General in charge of the Antitrust Division. Great to have you both here. So, Jennifer, as I say, just starting to look at 2019 before 2020, it was quite a year, and there was a lot of difference of opinion going on.
It's been, I think, eventful is a great word. It's been odd, it's been unpredictable, and certainly differences of opinion. I think you mentioned FTC v. Qualcomm, and that's the one that stands out the most to me, because you really have completely divergent views on the theory of that case coming from not just between the DOJ and FTC, but actually among the FTC commissioners as well. And really extreme, I think, real divergence on their positions. So that's going to play out next year, because the arguments on appeal from the district court's decision in that case will be in February, and maybe we'll even get a decision at the end of next year.
So, Bill, what's going on in your old shop? Because back 100 years ago when I actually practiced antitrust law, normally FTC and DOJ sort of worked it out behind the scenes. And now it's not just the Qualcomm situation, but now they're both going after the same companies on tech. They don't seem to be getting along so well anymore.
It's unusual and more than a little bit unprecedented. There's always friction between the FTC and the Antitrust Division because both want to work on interesting matters. But they have an internal process to sort it out and make sure no company is subject to duplicative investigations. This time it seems to have broken down and spilled out into the public. There was Senate hearings where senators on the Republican side and the Democratic side challenged what was going on and questioned whether or not these two agencies are doing well by the public interest in terms of letting these fights go on.
Well, Jen, there's the public interest. There's also the interest of companies trying to figure out what the rules are by which they decide on mergers. And now you've got DOJ and FTC that might come out in different results. And if that weren't enough, now you got the states coming in and say, you know what, we don't think they're enforcing the federal antitrust laws well enough. We're going to join in the T-Mobile Sprint situation. Yeah,
that's right. And I don't really know what that's going to do to the merger and acquisition scenario going forward, because, you know, this is so much unpredictability. And these companies now are not just, you're exactly right, depending on which agency you get, you could have a different outcome. Now, that's not right, because they're enforcing the same laws. And so even the remedy, because you have an FTC that still seems willing to impose a remedy that's behavioral, whereas the DOJ doesn't want to go down that route. And then on top of it, with the states, you have 50 enforcers. So you could get cleared, as happened with T-Mobile Sprint, by the federal agencies, and then have the states go after the case. So, and I think that's part of the reason why the states are still undergoing their own investigation of the big tech platforms, because I feel like they want to stake a space there that if the federal enforcers don't do something that they think is appropriate, they can then go forward.
We're talking with Bill Baer, former Assistant Attorney General for Antitrust, and Jen Rhee of Bloomberg Intelligence. So, Bill, what about tech? Let's focus on that, because that seems to be a big target for antitrust authorities of all sorts going into 2020.
Right, Europe as well as the United States. There's been a lot of action in Europe the last
couple.
Really
going after him, yeah.
She is. Going forward, I think we're going to see a big 2020. DOJ is looking at some of the high-tech platforms. The FTC is, as Jen mentioned. So are a number, almost all of the state's attorney general. Where it goes, we don't know. At the end of the day, people need to remember that if you think there's a problem with a successful platform, you got to show that not just that they were successful, but they engaged in behavior that harmed competition. And that's a challenge.
Well, let's take one up now that reported there's an investigation going on, which is Facebook and what they're doing with their various apps and sort of cross-selling, as I understand it. There are reports that actually they're really moving forward with that investigation.
It's interesting. They are, according to the press reports, they are talking about getting a preliminary injunction to stop Facebook from integrating a couple of the apps it acquired over the course of the last 3 or 4 years. That'll be a tough case for the FTC to bring. At the same time, their argument is going to be, we can't let those eggs get scrambled. We're not going to be able to unwind it at the end of the day. So, so their argument to the court will be, let's keep the status quo until we can complete our investigation.
So, Jennifer, if that weren't all exciting enough, we now have some Democratic presidential candidates who are specifically going to what Bill just said and saying, you know what, Elizabeth Warren's saying, I want to introduce legislation to undo some of the mergers that have been done in the past.
Right, and the thing is, well, first of all, this would be really drastic legislation. So, when we see a Congress that's so divided, it has a difficulty even getting the no-brainer legislation through, I don't see that kind of legislation having any chance at all, even if Elizabeth Warren is elected president. But the one thing I will say is that it would take, in my mind, legislation, because I think any effort to try to break up some of these big companies by the federal enforcers through the courts is just not going to be successful. They have precedent, and these courts have to follow precedent that's built up over years, and it's a really high hurdle.
Bill, the one thing that does strike me is this. I mean, these things go in waves. I mean, going all the way back to Teddy Roosevelt about how aggressive people are or not. But when Donald Trump was elected president, everybody assumed they'd be going easy on antitrust. I don't see much evidence of that. Whether they get a lot tougher or not, separate question. But it hasn't really eased up much.
I think that's right. Both at the Justice Department and at the Federal Trade Commission, they have remained quite aggressive. There are allegations that some of the decisions being made have a political tinge to them. I have no reason to buy into that theory, but it is controversial. The one thing I'd say in addition to Jen's point, though, is that there is a potential for some consensus long-term between Republican conservatives who are worried about privacy, intrusiveness, and to some extent about perhaps bias by some of these platforms, and the Dems, like Elizabeth Warren, who think there's just too much power in the hands of too few and we need to break them up. So some of the statements on the Hill have suggested there is an area for possible consensus. Whether it works out in these crazy times or not, who knows?
Whoever thought that we get bipartisanship coming out of antitrust enforcement.
But I would expect that to be more on privacy legislation, I think. I could see some antitrust legislation, too. But I certainly think privacy might be a little bit ahead. As
we used to say in the law business, you can argue about it or look it up. We'll find out. Okay. Thanks very much to Jen Rhee of Bloomberg Intelligence and Bill Baer of Arnold and Porter. Coming up, President Trump met this week with a group of governors about what can be done about regulation. We talk with one of those governors. He's Republican Mike Dunleavy of Alaska. That's next. This is Balance of Power on Bloomberg TV and radio. This is Balance of Power on Bloomberg Television and Radio. I'm David Weston. President Trump, as we say, met this week with a group of governors because he wanted to talk about what further could be done about regulation, something that's been very important to the president since he took over. One of the governors he met with is Alaska Governor Mike Dunleavy. And Governor Dunleavy joins us now for today's conversation. Chief Governor, welcome. Good to have you here.
It's great to be here.
Okay, so take us, insofar as you can, take us inside that room. What was said? What was accomplished?
Well, the president, as he stated when he was elected, he's trying to find ways to reduce barriers for people and for business to grow. And so inside the room, a bunch of governors and some of his staff, we talked about different regulations, different areas that we could take a look at and then talk amongst each other to see how we can reduce barriers. For example, in Alaska, we have a very large military population. We have a number of military bases. You get folks transferring in. You may have spouses, for example, that are nurses or have other professional degrees. Sometimes it's difficult to bring the licensure into a state such as Alaska without it taking a lot of time to get that person prepared to actually get a license from Alaska. So we're having the discussions with other states, with the president, how we can have a reciprocal agreement with a lot of states so that when those folks come right in, they can go right to work and we get that expertise that we need.
So you make a great point here, Governor. We've heard from other people, labor economists. The percentage of workers, regular workers, who are subject to state and local regulation has grown and grown and grown and grown. And it sometimes can impede labor markets as a practical matter. Is that your experience in Alaska? And what can you do, or what have you done for that matter, to try to address that problem?
Yeah, again, for us, the bases highlight this with the military spouses. And so with a tight labor market, tightening labor market in the lower 48, as we call the rest of the United States, it becomes more difficult to get some of these professionals. So this would be very helpful for Alaska once we do this. And so we're looking at that regulation as well as probably 200 others that we have on the books in Alaska to see how we can modify or eliminate those regulations to improve the business climate, the professional licensure climate, just being able to make it easier for people to work and for businesses to do business in Alaska.
Do you need the legislature to help you? Because there have been times in the past over the budget you've had some problems with the legislature. You had to make some tough decisions up there. Does the legislature with you on this deregulation?
We're having that discussion, and we think the legislature is going to be with us on a lot of these regulations. Again, we want to make sure that the regulations that are kept in place are there to protect people, but not impede people or impede business. And that's what we're looking at.
Where are you on the budget? Because we talked to you last year, and it was really pretty rough. There was even a recall effort that didn't go anywhere, but there was a recall effort. Where are you on this year's budget? Is it easier this year than last year?
Well, so last year we reduced the budget by about $650 million. We had a $1.6 billion deficit. We closed that by about a third, a little over 40%. This year we went in with a flat budget because we actually, and this is another issue that we're talking about in Alaska, we have statutory formula programs that consistently increase the cost within the budget. In other words, push against the ceiling in the budget. So we're going to talk with the legislature about rolling back potentially some of those statutory programs so that we can keep a flatline budget, and then our administration, our different departments are looking at ways to more efficiently reduce the budget surgically without having to cut large chunks of the budget off.
Where are you with the university system? Because that was quite controversial last year because one of the things you really had to cut.
Right. Well, at the end, we came up with a 3-year agreement with the university system that we'd have a step-down process in terms of reducing the budget. We signed an agreement. Things are going well there, so things are looking pretty good for the university in terms of the budget on our side as well. So
let's talk also about trade, because Alaska, it's important for Alaska trade, both inbound and outbound. Right. We now have a USMCA that looks like they're going to make it through sometime in the new year. Right. We also have, it looks like, a U.S.-China trade deal. What does that mean for Alaska?
So we have trade with Canada, for example, our eastern neighbor, of about $700 million, almost $800 million per year. So what occurs in USCMA is going to help Alaska with that trade in terms of intellectual property, potentially energy, machinery, et cetera. We really trade with Asia, though. Our trade with Asia is in the billions. And so we are the furthest western state in the United States. We're really a Pacific Rim state, Alaska is. We're also on the Arctic Ocean as well. So our closest neighbor is Russia, just a few miles away. But when we get this trade issue settled with China, I think it's going to be very helpful for Alaska because we deal with a lot of fish, timber issues with China as well as Japan and Korea.
How much of that Asian export is going to China specifically? Because you're reasonably close to China.
About 1.3 billion, more than Japan. It's our biggest trading partner.
And have you had issues with access to markets, or are the things that you're exporting pretty open from China's side?
I think they're pretty open, but we just have to be careful that in this agreement, in the trade agreement, that we also protect our fisheries from a potential high seas fishery that intercept our fish. So we're working through that with our federal delegation. They're working with Representative Lighthouser and others that are doing the negotiations, but we're keeping an eye on this. And
when it comes to fisheries, what are the biggest challenges for you? Japan historically has been a big fishing nation, for example. Yes. Russia as well. What are the biggest challenges for you up in Alaska in terms of the fish?
Right. For example, we have the Russians that are just across from us, Bering Sea, and we just want to make sure that everyone's being held to the same standard when we're trading, so that one does not get an unfair advantage. We believe that Alaska's product, our fresh caught fish, is the best in the world. So if we have trade agreements that level the playing field, we believe that we can compete and actually do pretty well in this environment.
As you look at growth potential for Alaska, what's the #1 target for you? What's the biggest opportunity?
Well, that's interesting you ask that, because we've always been known as a resource state, and we'll continue to capitalize on our resources, oil, gas, hopefully timber. We'll stand up a robust timber industry, I hope, in the near future, as well as more fishing. But it's our location, I think, that's going to bode well for Alaska. We're about 9 hours by air to any industrialized place in the northern hemisphere. We also have the second busiest cargo airport in the entire country and the 5th busiest cargo airport in the entire world, and that's growing rapidly. We have about $500 to $700 million of new investment in that airport to handle cargo. Also, we're in conversation with individuals in Alberta to potentially connect a rail link with Alaska to Alberta and the lower 48 so they can transport their products through Alaska. So transportation, location, I think, are going to be big for Alaska in the next several years.
How important are U.S. military bases to you up in Alaska? Because we just have a new appropriations bill coming through, and there's a lot more money for the military.
Yeah, we have several military bases in Alaska. We have an intercept missile site at Delta Greely, Fort Delta Greely. Fort Wainwright is a big Army base up in Fairbanks. Eielson Air Force Base, Baer, Joint Base Elmendorf-Richardson. So we have a number of bases in Alaska. We have a large Coast Guard presence. It's very important because, again, our nearest neighbor is Russia, just a few miles away, and we are a Pacific Rim state.
Okay, Governor Mike Dunleavy, I'm pleased to say we're going to have much more with the Republican Alaska Governor Mike Dunleavy on radio in the next hour. We're going to talk about some of those natural resources he just talked about. This is Balance of Power on Bloomberg Television and on radio. This is Balance of Power on Bloomberg Television and Radio. I'm David Weston. Dr. Paul Farmer has spent his life bringing health services to the poor in places ranging from rural Haiti to Peru to Russian prisons to Rwanda. He founded Partners in Health, which provides more than 1 million community health visits every year around the world. When I sat down with him, I asked him what his experience taught him about the respective roles of government and private sector in addressing the pressing need for health equity around the world.
It tells me that we're insane not to integrate public and private. We didn't come to this quickly. It took us a decade to say, of working in Haiti, say, to look around and say, well, the hospital that we've built, which is a private NGO hospital, is, answering a great need. But look at all these public clinics and hospitals around that are really shuttered, that are not working. And so we decided, again, as a collective, that we would direct all of our attention to public facilities, hospitals, clinics, whatever. Now, in Rwanda, the yield on that was just enormous, right? Just to give one example, the hospital in the northern part of Rwanda. Yeah. So that's a beautiful hospital. Partners in Health built it. It cost $4.3 million, which is not a lot for a 150-bed hospital. That wouldn't even get you a Starbucks building in New York. And within 1 year of building it, the Rwandan government was paying 70% of all the salaries. And so that allows you to go deep and to build up, to take those private resources that are private capital can move more quickly than public capital.
Much of Dr. Farmer's work is in some of the poorest nations and areas around the world, but that work has given him a special perspective on the U.S. healthcare system. And he says we may actually be able to learn from places like Haiti.
I think most Americans know that we spend a really big fraction of our GDP on healthcare. It's over 18%, I think. And there's no doubt that we're not getting value for that kind of investment. And there are lots of reasons for that. There's a very weak health system here, the system itself. When someone needs a heart transplant or any major surgical procedure, we've got that covered. On biotech development, new therapeutics, the Americans we're way ahead in many ways. The system itself is weak, however. And one of the primary weaknesses, in fact, I would go so far as to say the primary weakness is that we don't attend enough to preventing adverse outcomes among those who are already sick. So what do we need? Well, we learned in Haiti and then Rwanda that if you have community health workers who actually help people in their homes or places of work, that you're going to get improved clinical outcomes. One of the reasons that in the United States we work with the Navajo Nation is because we don't have to argue about that with them. They have had community health workers for decades, 60, 70 years. So we knew we wouldn't have to go through the same arguments, and it was about financing these petty, small salaries. These are underpaid people, and there should be literally millions of them in the United States, helping move care from hospitals and even clinics home. We're starting to hear that here in the United States as well.
Really?
Yeah. I mean, some of the major funders, I mentioned the Gates Foundation or the Gateses, Warren Buffett, other people who have paid attention to this are saying, hey, how should we do this in the United States?
That was Dr. Paul Farmer. He's co-founder of Partners in Health. And you can watch the full interview with Dr. Farmer on Big Decisions that premieres tonight at 9:30 p.m. Eastern Time right here on Bloomberg Television. Coming up now, Balance of Power will continue on Bloomberg Radio. In our second hour, we're going to have more with Alaska Governor Mike Dunleavy. We'll also talk trade with Chris Krueger. He's a policy analyst at Cowen Washington Research Group. This is Balance of Power. We are on Bloomberg Television and on radio.